Bitcoin has been bouncing around the $70,000 area for about a month now, but where can we expect it to go next?
There were 11 spot Bitcoin ETFs approved at the same time in the US on January 11th.
And since the first approval of the Bitcoin ETF in early January, we have been seeing a continued uptrend in the chart with no sign of stopping.
But as more and more people, investors, advisors, asset allocators understand that this really is a new asset class and there's scarcity value now associated with it, and they believe that, I think we're seeing a movement in.
With the Bitcoin having only 3 weeks away, what can we expect to see?
We're talking about the halving, and our experience with halving in the past is that, you know, it's a positive for Bitcoin.
But is Bitcoin really the best crypto asset to make money from in this crypto bull run? With some people turning $15,000 to over $1 million, what can we expect from altcoins and meme coins as well?
Just because you make money in it, which I was fortunate enough to do, doesn't necessarily mean that it's for real.
First off, as the date for the upcoming Bitcoin halving on April 19th draws near, excitement is building among cryptocurrency enthusiasts. Key figures in the industry, like Bitwise CEO Hunter Horsley, are discussing the potential impact this event might have on Bitcoin's price, with Horsley foreseeing a significant increase. Comparing this halving to the one in 2020, Horsley notes a massive difference in Bitcoin's value. In 2020, it was around $9,000, but now it's hovering near $70,000. This means that cutting down on the creation of new Bitcoins will likely have a bigger effect this time around. Other experts agree, suggesting that this halving could push Bitcoin to new record highs. The big idea behind all the excitement is simple economics. When something becomes rarer, its value tends to go up. By cutting the rewards for Bitcoin miners in half, the halving reduces the number of new Bitcoins entering the market. Combine this with more big investors getting into Bitcoin, and you have a situation where demand might outstrip supply, pushing prices up. But remember to follow the channel as we give you the latest in the crypto world. And don't forget to like the video and leave a comment telling us what you think. Now, let's get back to the video.
Creating whatever random ass memes. I don't know. Why do you guys think meme coins are gonna have a life anywhere, not just Solana? Like, to me, it's just it's a bizarre thing. I think of people being terminally online and kind of having nothing better to do.
Co-founder of Solana, Anatoly Yakovenko, has spoken on the recent meme coin craze that has been happening on the Solana ecosystem, with some coins exploding on a massive 5,000% gain in a single day. One savvy trader, known as Shatter Soul, recognized the potential of BOEM and invested approximately $8,500 in the pre-sale. As the coin's value surged, the trader capitalized on the opportunity and sold their entire holdings for 767 SOL, approximately $123,000, in a mere 14 hours. But Solana's meme coin frenzy, which saw the blockchain briefly overtake Ethereum in terms of transaction volume, appears to be fizzling. The volume generated by decentralized exchanges on Solana has declined 61% over the past week, according to data from DeFi Llama. Aside from stablecoins and Solana's native cryptocurrency, meme coins have been Solana's most popular tokens in March. But the Solana meme craze has come to a halt due to the emergence of offensive tokens containing racial slurs and anti-Semitic symbols within the ecosystem. This marked the end of a frenzy in retail trading, prompting prominent figures like Solana founder Anatoly Yakovenko to swiftly denounce such tokens. The incident ignited a debate about the responsibility of developers to regulate their projects' interfaces in decentralized exchanges.
Says it's going to hit that limit, and you're gonna figure out, okay, this is where things, when you're redlining the engine, this is where they don't work as well as they should.
Hayden Adams, the founder of Uniswap, advocated for monitoring and blocking such tokens, emphasizing a refusal to support or profit from hate speech. This has prompted a shift into the Base ecosystem. Base is a Layer 2 scaling solution for Ethereum built by Coinbase, which aims to make transactions faster while leveraging the security of the Ethereum mainnet. So does this mean the Base chain ecosystem will be next to have massive profits like Solana just did?
spot Ethereum ETF is a matter of when, not a matter of if.
Now that Bitcoin has had its spot ETF approved, Ethereum is now looking to have its own spot ETF approved. Although there is uncertainty of the approval by the SEC, many analysts are still very bullish on the possibility that it can happen. Bitwise, an asset management and ETF provider, has filed for an Ethereum spot ETF amid the uncertainty, with hopes of the approval as early as May. Many people were expecting a massive sell-off after the Bitcoin ETF approval, but we have yet to see that and has since remained in the $70,000 area. So will Ethereum's price reflect the same as Bitcoin when it gets the ETF approved? Vitalik Buterin has suggested a new way to decentralize Ethereum staking. Ethereum co-founder Vitalik Buterin has proposed a technique to incentivize better decentralization of Ethereum by penalizing correlated failures among validators. Buterin posted his thoughts on March 27th regarding supporting decentralized staking through more anti-correlation incentives to the Ethereum Research Forum. He suggested if multiple validators controlled by the same actor fail together, they would receive a higher penalty than if they failed independently. The theory is that if you are a single large actor, any mistakes that you make would be more likely to be replicated across all identities that you control. Buterin observed that validators within the same cluster, such as a staking pool, are more likely to experience correlated failures, likely due to shared infrastructure. The proposal suggests penalizing validators proportionally to the deviation from the average failure rate. If many validators fail in a given slot, the penalty for each failure would be higher. Simulations suggest this approach could reduce the advantage of large Ethereum stakers over smaller ones, as large entities are more likely to cause spikes in the failure rate due to correlated failures. Potential benefits to the proposal include incentivizing decentralization by having a separate infrastructure for each validator and making solo staking more economically competitive relative to staking pools. Buterin proposed other options, such as different penalty schemes to minimize the average big validator's advantage over little validators and examining the impact on geographic and client decentralization. So what can this mean for the price of Ethereum?